Welcome back, everyone. Michael here with Offshore Citizen. Recently, I did a video on the permanent or indefinite residency regime in Malta, and some people were asking me about what the tax consequences are. Now, as it happens, there are a bunch of different programs that you can use to move to Malta or shift your residency to Malta, and they more or less have similar tax regimes. So in this episode, or in this video, I'm going to explain to you how the Maltese tax system works, specifically for people who are considered residents but not domicile. So I'm going to explain a little bit about what that means to be resident versus domicile. I'm going to also use it as a little bit of a context to explain a really unique type of tax system that doesn't exist in most places but could be really beneficial for you. So stick around to the end. Before we do that though, if you haven't already, please hit the subscribe button, hit the notification bell. Really appreciate your support in that regard. If you like the videos, please share them with your friends. Make sure you don't mix out on any future videos. And if you're at all interested in relocating somewhere else, getting a second residency somewhere, or getting a residency somewhere, I guess, getting a second passport, citizenship by investment, residencies by investment, or structuring your taxes to pay the lowest legal amount of tax possible, setting up your company to optimize the tax, forming companies, open bank accounts, please reach out to us. You can book a call with me, clarity.fm/Michael Rosmer. There's a link below, or check out our websites, offshorecitizen.net, offshorecapitalist.com. All right, let's jump into it. Okay, so as I mentioned in a previous episode, like I was saying, I talked a little bit about the Maltese indefinite residency program, which basically gives you permanent residency by investment, okay? Now, there's like a residency program for residents or citizens of the EU and the EEA, and then there's a global residency program for a bunch of other people. There's one for pensioners, there's one for high-skilled people. There's a bunch of different programs in Malta. That being said, they all have kind of similar tax treatment, and so we're going to talk about that. And this is based on the idea of domicile and residence, okay? Now, these two things, in most countries, they aren't the same, or they are the same, or at least they don't mention domicile at all. So for instance, if you were to look at Canada, if you were to look at United States, if you were to look at Australia, etc., you typically don't hear this term domicile, you just hear the term resident, okay? And Malta is one of these places that separates it. Now the UK also separates it, and so they have a famous non-dom program, which is quite interesting. Again, I'll do an episode about it in the future. So again, subscribe, make sure you don't miss out. But Malta is one of these places that we can look at, okay? And so what does this mean to start off with? So you're resident, loosely speaking, if you spend 183 days in a country or if you meet whatever other criteria they have. Now, in the case of Malta, you don't have to maintain 183-day presence in order to be resident there in most cases, not necessarily all, but most, right? And so, but you can, so you have the visa, you meet a standard where you're not, in most cases, you can't be resident somewhere else, or you can't spend more than 183 days anywhere else. And typically, the criteria is that you can't spend more days in the other country than you can in Malta. Now, in reality, they don't police that particularly, but in theory, that's the rules, okay? Now, what about the domicile part? Okay, so you're like, all right, great, I'm resident somewhere, meaning that I either spend 183 days or more there, or my center of vital interests are there, I have a permanent home, that's kind of the place that I make my home, and I pay my taxes, etc. What about domicile? Domicile typically, in the case of Malta, basically means you're a citizen, okay? In other words, the tax system for Maltese citizens actually is not that good. The tax system for foreigners who want to move to Malta and don't take up Maltese citizenship is pretty good, okay? And this is kind of a common trend. I did a video before about the new programs in Greece, talked a little bit about how they're bringing in new programs, and they have brought in some new programs in Italy, and there's kind of this wave of programs designed to attract wealthier people, and these are based on the principle of domicile, right? They're basically saying, hey, look, so long as you're not domiciled here, but you're a resident here, we're going to give you some special tax treatment, okay? So how does that work in the case of Malta? In the case of Malta, so income arising within Malta, okay, meaning if you have a local business, you're working here, you invest some money in some property, etc., that's all taxed normally, okay? But what they do is they say, okay, if you have foreign income, okay, there's going to be two types of it, okay? Well, if you bring it into Malta and it's capital gains income, okay, so in other words, This is where we separate. This is this concept of remittance base, okay? And I've done a video before where I talk about, how there's worldwide income, there's territorial income, and there's remittance-based income tax systems, okay? So you can go and check that out from way back. Remittance-based is essentially the fact of, do you bring it into the country? So in other words, we can separate. We can say income earned locally, foreign income, right? And foreign income, but was it brought locally, okay? And so you'll hear this in Singapore. They mention remittance. Gibraltar mentions remittance. Malta mentions remittance. In UK, there's a remittance base for nom-doms, some things that happen there. So remittance is sometimes a factor in taxation. Thailand uses remittance to some extent, right? So it is a concept that matters. So the way that it works in Malta is if the income is foreign, okay, and you don't remit it, then it's not taxable, typically, okay? If it is income that is foreign and it's capital gains income and you do remit it, it's still not taxable, okay? So that works out pretty well if you're an investor, right? If you're a global investor, you're investing outside the country, then typically you can earn that income. You can even bring it inside the country. You don't pay any tax, okay? Alternatively, if you have, say, active or business income, it's foreign income, and you don't bring it into Malta, then you're not taxed. Now, generally, what does this mean to bring it into Malta, right? Typically received in a Maltese bank account, right? That's one part. Or enjoyed in Malta. So this is like money that you spend in Malta. It's money that you deploy within Malta, essentially. If you do bring money in, you end up getting taxed at 15% on it. Okay, so flat 15% for foreign income, which is remitted to Malta, no tax for foreign income, which is not remitted to Malta, and no tax for foreign capital gains, which are remitted to Malta. Okay, that's the system. So pretty good tax system for the right person, right? In other words, if you can structure yourself through a business and your business is making money and your business is abroad, great, you can be optimized for tax. If you're doing international investing, great system, fantastic. What else can I tell you? There's no inheritance tax, no wealth tax, no gift tax, etc. So again, in that sense, very good. So yeah, it's a fairly attractive place from a tax standpoint. Whether you want to go live there, I mean, I don't really find a ton of people who love going and living in Malta, but to each their own. People from the gaming industry certainly went there traditionally because it was kind of a gaming hub. And I do have some friends and clients who have moved there, and perfectly do fine with it. And it is definitely within the EU a place that you can get very favorable tax treatment. Arguably one of the only places that you can potentially pay zero tax. If you look across the whole EU, I mean, under the Portuguese non-habitual residency regime, trickier, but potentially you could pay zero tax, right? There's some cases with one of the Cyprus programs, you could pay zero tax. You could pay it under the Maltese system, you could pay zero tax. That's pretty much it, right? Most of the other programs or most of the other countries, you're going to pay some tax, whether it's 10% or whatever. You're going to be taxable in some way, shape, or form. So probably the easiest, most competitive tax regime in the EU. Anyway, I hope that helps. If you're interested in other programs, if you want to know, hey, where should I move? How do I set myself up for tax? Hey, I don't want to go to some place like Malta, but I want to still pay tax. Is there a corporate structure I can build? Happy to help you out with that. If you're interested in getting citizenship by investment, maybe you want to have an EU citizenship or residency, or you want to have another citizenship or residency, please reach out to us. Book a call with me, clarity.fm/Michael Rosmer. There's a link below. Check out our websites, offshorecitizen.net, offshorecapitalist.com. Smash the subscribe button, hit the notification bell. Give it a thumbs up if you liked the video. Share it with your friends, please. And if you don't like it, please tell me. And tell me what other countries you'd like to hear me talk about. So I will see you guys on the next video.